I've never seen an investing app like this before. Why hasn't someone done this already? Why are they the first people to finally do this? The service has a funny name. It's called Fennel, but it's this new investing service that's under a year old, but they're doing something fairly unique here. I'd say genuinely pretty darn unique. Let's do a little first impressions tour of the app and see what it's all about. Personally, I don't have a huge stomach for in-depth data, so I'm not like Neo reading the raw code in the Matrix. I'm more like Ricky Bobby. I just want to go fast, make a decision, and move on from it. But the way that this data is displayed makes me want to click into it and look at it a lot more than normal. So that's pretty fun. When we first look at the app, you see that there is a decent amount of emphasis on ESG. And the interesting thing here is, whether you love or hate ESG companies, now we can see exactly how involved our investments are in those kinds of activities. Some of us want to invest in companies that care about the environment and put women in leadership and do that kind of stuff. Some of us think ESG is a leftist sham that muddies the waters of the investing world, and it actually distracts companies from what they're really here to do, which is to make a profit and stay in business. So regardless of where we all fall on that spectrum, I've never seen investing data like this app shows really ever. I think one of the main competitive advantages is just how easy it is to interpret the data, and we'll dive into that a little bit deeper later, but it just seems to be a lot more intuitive and make more sense than most other investing services I use that are just big charts full of numbers. That doesn't speak to me. But it also does way more than just talk about ESG info on companies. It also shows things like your total portfolio breakdown with way more useful info than most, if not other, investing tracker services I've used. It shows stockholder voting info because as investors, we have voting credentials. Like we can vote towards what happens for a company unless you do other things, which I'll get into that later too. Fennel is also a certified B Corp, which has got to be rare for a brokerage company, I would think. And then they also show like news and stuff if you're into that sort of thing. I typically try to avoid the news, but it makes it easy to find news about the company that you're researching if you want to do that. And then you can also tap into kind of extra info that feels like most of the time it's buried and hard to find. Like there's this whole people tab, and it's all about their executive team. It shows their total compensation. It shows who each person is and what their role is and kind of a little bio about them. Like it's really this easy collation of a bunch of data. And you don't have to look at it by any means, but if you want to dive in, it's just super easy. Even more unique than the way that they display data and talk about how you're investing and where your money's going and all that jazz. It's the way that they're not really grabbing for money in the same ways that most, if not all, other investing apps are. Probably most. There's got to be some other company doing the same thing, but it's pretty rare that an investing company isn't just taking the low-hanging fruit in terms of money they can make. So what they're not doing is payment for order flow. Payment for order flow is a way that an investing brokerage can typically make quite a bit of money. And here's what they do. Whenever they're going to make a move for us, let's say I want to buy 100 shares of Apple stock. The brokerage company themselves, they can't do all of that on their own. They can't be like, boom, 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 stock market, make the exchange, boom, 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 done. They actually have to go through a third party called a market maker. So just picture some other company who does the actual exchanging of shares for dollars for them. The broker is a little bit more like the restaurant. The market maker is a little bit more like the food supplier or something like that. That's a terrible analogy, but we'll go with it. So brokers are typically incentivized to work with particular market makers because they'll give them a little bit of money back. So for every trade, they get a fraction of a penny. Then if you end up doing millions of trades per day, then all of a sudden you're making tens of thousands or hundreds of thousands of dollars every single day just for sending your investment orders through that particular market maker. And Fennel doesn't do that. For some reason, they say, you know what, we don't want your money. It's a tricky thing to say that you don't want to do that because frankly, it's an easy way to make money that basically everyone else is doing. One of the reasons why you might not want to do it is you could get into a pickle, kind of a situation like Robinhood did a year or two ago with the whole GameStop debacle. Part of the suspicion that might have happened back then was the little man, the people, were trying to sort of manipulate the market in a way that would hurt these powerful people on Wall Street. Everybody got together on a Reddit forum and said, let's take down these Wall Street guys. Let's basically force them to lose money and we'll make money instead. And some of the people that Robinhood was working with, those market makers, if I remember correctly, said, no, we're not going to do that. We're actually going to stop trading so that the average guy, the Reddit guy who's trying to hurt Wall Street can't do it. A lot of people assumed that meant that when the big powers that be, these powerful Wall Street traders, were getting taken down, they were able to basically pick up the phone and say, hey, market maker, stop this from happening. And because they have that leverage over this middleman, they were able to manipulate the situation here. And that was not fair. So I don't think Fennel is in this to not make money. I'm assuming it's more about the morality of having control over what actually happens with people's investments. Being able to say, hey, Brendan, if you say you want to do this thing, you're going to be allowed to do it. We're not going to have a third party trying to get in the way of that, regardless of their motives and intentions and things like that, because we're not beholden to them for a paycheck. We can tell them what to do. I'm assuming that's how it works. They also don't participate in stock lending. And honestly, until now, I couldn't have cared less whether or not anybody did stock lending. But as it turns out, it's kind of a big deal. Because I love you so much for being here and for subscribing, I will describe to you what stock lending is in a very short amount of time so you don't have to do the research that I did. Stock lending is like renting out your investments that you own to a financial institution like a bank. So it'd be like if you had a house like the house I'm in now, and you said, hey, I will rent you this house, person, and you pay me a fee. Same thing happens whenever we rent out our stocks. Whenever we lend them, then they pay us a fee back. But there's a lot of problems with that. Oftentimes, whenever we lend out our stocks, whenever we're renting them to that financial institution, we don't get a dividend anymore for the stock. And historically, whenever someone has their dividends reinvested into their account, that can account for a huge portion of your overall returns. We're talking 20, 30, 40% of your returns could be from dividend reinvestment. And so you're giving up a tremendous amount of gains just to get this little fee for them for renting out your stocks. And you might be thinking, well, Brendan, but you're still getting a fee. So especially if the fee is greater than the dividend was, then what's the problem? Or maybe the stock doesn't pay a dividend. You loan that thing out, you're making money that you wouldn't have made otherwise. Well, here's the other tricky thing. When you receive that cash payment, that fee for lending it out, like collecting rent on a house, you could probably be taxed at your regular income tax rate. And as we know, an income tax rate is the highest possible way you can pretty much get taxed in life, instead of a dividend tax rate, which is typically much lower. So odds are if you're lending out a bunch of stocks instead of getting dividends for them, your taxes could be potentially higher and or more complicated as a result. We don't like that. The other problem with this is that you lose your voting rights with that company. And so if you really wanted to be involved and make a difference in what a company is doing and actually cast a vote whenever they have like a stockholder meeting, then you can't do that anymore, because whenever you lend out the stock, now the borrower gets the voting rights that you may have had. It's another one of those like minute things that feels like, oh, it's not that impactful. It kind of doesn't matter. But when you total all of that up and you realize, oh, maybe that financial institution can borrow millions and millions of shares. Now they have an individual vote that's so powerful because they've borrowed all these shares that now they can really sway how a company is doing things. That's really powerful. Some big company like Apple or Meta or somebody like that all of a sudden has this vote that makes the company do something new, that could really shape things. That being said, I have never personally cast a vote in any way for any of the companies I've ever owned. So you do have to choose to really care about this thing, or at least care about limiting someone's potential monopoly on votes. So if that's important to you, this could be a really good reason to go with Fennel, or to go with somebody else who doesn't do stock lending, or frankly, just to not lend out your stocks. No matter where you're investing, could be a good idea to not lend out your stocks if you don't want to give that kind of power away. And then the biggest reason why we might not want to lend out our shares that I'm just learning now is that normally the things you're investing in are covered by a specific kind of federal insurance that's called SIPC insurance. A lot of people ask me in the comments, Brendan, what happens if this investment brokerage goes out of business? What happens if Webull shuts down? What happens if Acorns shuts down? Will I lose all my money? Guys, this isn't the 1929 stock market crash here where things were crazy. SIPC insurance protects us up to a certain amount, typically $250 for invested money. That means that if that brokerage goes out of business, then you're covered for that money. You get it back. But the problem is that when our stocks are being borrowed by somebody else, they're not protected by that insurance anymore. So we're opening ourselves up to higher tax rates, losing our dividends, loss of voting rights, loss of insurance coverages, all just so we can get this little fee back to make some money on these borrowed shares. And I just don't think that's communicated well enough in most of these other investing brokerages. Guys, if you're going to incentivize me to do something, then give me both sides. Give me the upside and the downside. The upside is you'll make this money in this way. The downside is here's these other 4 or 5 things. At least make it clear. At least let me make like a well-informed decision. But they don't. So that's why we have to do tons of research and or watch YouTube videos where I do tons of research for you. Fennel is also a certified B Corp, which I didn't really know what that meant off the top of my head. If I'm honest, I had to look it up and see like, what's a certified B Corp even mean? For Fennel to choose to be a B Corp, it means that it's still a for-profit company. It's not like they're giving away money or they're existing to better other people or whatever. They're still making money, but it means that they have to meet certain social and environmental criteria and be like held to higher standards than a normal company does. Then you also have to publicize your performance to these standards. And so it's kind of like the worst possible way to be held accountable. If you're asking me, like I've gained probably 10 pounds in the last few years and I want to lose it, but it'd be like me saying, I promise I'm going to diet and exercise. I promise to publicly show my body fat composition and pictures of me in my underwear. And also at any time, if anybody wants to ask me how I'm doing, they're allowed to. It's like putting this commitment that you think you want to make to be a decent company really out there in the open. Let's take a look at their app and I'll show you what it looks like so you can see for yourself. So here's the initial view. Whenever we first open up the portfolio, we can see what it looks like. We can see if we had money invested, what that kind of chart would look like. I believe that if we had money invested in here, that we'd be getting news all about the companies we're investing in. We'd be getting our portfolio's average ESG score and have it scored in this like unique kind of circular graph way. I don't know what it is, guys, about this kind of graph. I love them. It's just so clear to me exactly what it's telling me. I'm a graph guy anyway. I love some graphs, but this to me is just so obvious and clear the way it's like described. I think that this is an incredibly useful way to describe the information because you can really easily see like, oh, this is what their score on this. That's the score on that. Here, they got an 89 on this. They're really good at that thing. And then over here you go, oh, they're not so good at this thing. And it's like, it's just so simple and easy to get a portfolio snapshot of what you're doing overall. And again, if you don't care about ESG, maybe you just are shooting for all these numbers to be as low as possible. If one of them spikes up, you go, hey, who's doing that? Turn down the ESG stuff. Really easy. And then I really love this portfolio view. What I need to do is set up a watch list in here with my actual portfolio, because if you do that, then you can see what your total portfolio breakdown is. Actually, let's just do some of that right now. I'm going to get into my Vanguard because Vanguard doesn't show me this. So I'm going to log into my Vanguard so I can see exactly what I'm investing in, make a watch list on Fennel, and then we'll be able to analyze it and see all this data about my actual investments. So here's what it looks like whenever I open my Roth IRA account. It's only a couple different things. Vanguard long-term bonds, Vanguard total stock market index. It's pretty simple, but we can put this into a watch list now and see what the breakdown is so we can actually see what the data looks like. So I've got VBLAX. Next, choose an emoji. Not sure why I have to do that, but okay. Write a thesis. No. And then we're also going to add, oh, that's the name of the portfolio. Whoops. Oh, I can't look up VBLAX. I've got to do actual companies. Can't do VT Sachs. I wonder if they can't do mutual funds, if they can only do ETFs. That's what I'm going to guess. I wonder if I can do BND. Yeah, I'm guessing they can't do mutual funds. Okay, so this is a bad name. We got to change the name back. This is my Vanguard Roth, so I'm going to call it Van Roth. So if I have a watch list, I think it's going to assume that the data that it's showing me is based on both of them being equal proportion, which it's obviously not. Okay, so I think I was wrong about that. Despite making a watch list, I can't actually see what my overall portfolio breakdown is because it's not a portfolio yet. It's just a watch list. I can click on an individual thing and I can see information about that. So we can do that with VTI now just as an example and see what it looks like. So we've got a typical chart of performance, which is totally fine. I think it's very clear. I think the green being positives, the red being negatives. I like that. That's better than monotone colors. Immediately tells us the expense ratio, which is like one of the number one things I care about. So I really like that. Tells us our holdings, tells us what it is, which is really nice. And then it gives us our ESG score. So it looks like it's really good at carbon footprint, caring about that. Decent green technologies, resource use. Now we're getting not quite as good at corporate giving, human rights, product responsibility, workforce equity, corporate social responsibility, executive leadership, and shareholder rights. So like if I want to look at corporate social responsibility, because I have no idea what that is, I can click on that. Wow, and then it tells me all the things. So this is a score that tells you if the company is communicating how it's integrating the financial, social, and environmental dimensions into its day-to-day decision-making process. And you can dive into even more metrics. This is pretty cool. I mean, it's not even cool because like, oh, I care about this so much. It's just cool that I have all this information in one screen and I can like click into it right away. Oh, and then I think the performance here, I think the top performers within VTI for the last year were these companies. I'm guessing that this is contained within VTI. Wow. 800% in the last year. I would say it's doing well. Sheesh. Oh, average performance is 22%. Then worst performers are these guys. NXU, Class A, basically went from $500 a share to zero almost. Yeah, I'd say that's a pretty bad performance. These guys are hurting. They're headquartered in Mesa. I live pretty close to Mesa. What are you guys doing over here, man? Jeez. They are not doing well. Some machinery company. Yikes. Okay, and then there's more fundamentals about VTI itself. So we can look at a really quick beta and explain exactly what it is. So it's measuring a stock or ETF's volatility compared to the overall market. Of course, VTI is going to get a 1.0 because that's like the baseline for beta, and VTI is the entire stock market. So it should be 1. It better be 1. Gives us a dividend yield, gives us price to earnings ratio, price to book, current market data, market cap breakdown, which is really interesting. If you're not familiar, market cap is basically saying how big are the companies within this ETF, or how big is the company itself that we're looking at here. Even small cap companies are like huge in the scheme of things. You know, the company I work for day to day full-time job is like 20 people. We're not on the stock market at all, of course. We'd have to have infinitely more revenue and people and business to be on here. But relative to the other publicly traded companies, it tells you where these companies all lie. So by and large, most of the holdings in the stock market are in really big companies. It's almost like it doesn't even register the small cap companies. And then a sector allocation is always an interesting thing, because part of the danger, if you will, that we have with investing in a lot of index funds nowadays is just the fact that so much of the value of modern day stock market is in these high-tech companies. Facebook, Apple, Amazon, Netflix, Google, that kind of thing. So 26% of the whole stock market is in information technology companies. So we're really exposed there. It might be wise for us to kind of diversify a little bit and invest in other things that aren't that. This is an easy way to see that breakdown and see exactly where we're investing. And there you go. There's the top 10 holdings. So 26% of the overall stock market is these top 10 companies. Familiar names. Yeah, this is cool. This is well designed. I just appreciate so much when something is well designed. I hate it whenever something is difficult to use. I can't find what I'm looking for. It's just a mess. Not a fan. Then to just continue kind of exploring the app, if we click on the voting tab on the very bottom corner, it talks about like upcoming voting for each company. And so, no, I've never been involved in this in the past, but no, I've also never had as easy access to this. And so it's kind of interesting to see what the company is, what their sector is, and then what they're actually talking about here. So it's talking about compensation. Will you vote in favor of this company's executive pay plan? And so the company is in favor of approving their own pay plan. But if I want to, I can click in here and see a summary of it, see what the proposal is. This is such an easy way to digest what is typically really difficult information. And I know I'm like talking all these positive things about Fennel right now because, you know, I'm interested in it because it's new, because it's shiny. I'm sure there's negatives to it too. It's a brand new company. It's a brand new app. There's probably going to be bugs. I wouldn't be surprised if things like don't work the way that they should, that maybe support tickets take a while or like whatever. There's going to be problems with this, of course. Anything new is not going to be perfect. And so I'm not like shoveling all my money over here and starting up using this brand new app. More than anything, I just wanted to say, hey, look, here's a new service doing a really new and unique thing, and I think it's really cool. And so you might be like me and going, okay, well, if they're giving up money in some pretty obvious ways that a lot of other investing companies take, then how are they going to make money? Like, how is this going to work? Are they just VC funded right now, and they're going to have to like do something crazy in the future to actually stay afloat, or what's happening? Well, as of right now, the fee is $5 per month, flat fee to use this. I know a lot of people don't like fees because they'd rather use something like Robinhood that feels free. But we got to remember, Robinhood does things like payment for order flow, and a lot of other apps do too. And so even though it doesn't feel like we're paying any money, it doesn't feel like anything is happening that's costing us anything, we're either giving up choice or insurance, or we're giving up part of like a power struggle for them to have to be subservient to market makers. And so there is a cost. There's an opportunity cost to using these free investment apps. This way, you know that if you want to pay $5 per month, then you can choose to opt out of those things. I think that's really the way to look at this, is to say, okay, I don't like stock lending. I don't like all the power plays. I don't like payment for order flow. So if I can just pay to opt out of that, then I would. Kind of reminds me of paying for YouTube Premium. It's probably way too much money, honestly, to pay for YouTube Premium. We have like a family plan, and so my wife and I both can watch as much as we want, and there's never any ads. And you're just like, you're opting out of these annoying things that interrupt what you're trying to do. Kind of feels like that for me. It's like investing premium fee to opt out of that crap. You probably saw it here on the screen recording on my cell phone that I've got a free trial. I'm in day 6 of 7 of the free trial. I did get to download this and start a free trial without having to enter any bank info or credit card info or anything like that. And so that's really cool to me because I like being able to see something that's not just behind like a blanket little paywall that's like, you should invest with us, but you won't know until you dive in full-fledged. You'd be like, you can't go on a date with somebody unless you marry them. Like, screw that, dude. So I love that you can just see this. I hope they keep that in the future, that you can actually like see it and use it, so to speak, without having to actually open a real account. But I'm so curious. I do want to open an account too. I just have so many accounts, guys. God, I have too many accounts. Oh, maybe I need to close a different account to open this one. It's like your rule with keeping your house clean. If you buy something new, you've got to throw out something old. Should I do that with investing brokerages? Because what I imagine it could actually be that's really value add beyond the morality or lack thereof or care for ESG junk. I think the interesting thing would be to have a portfolio that really breaks down where are you all invested? Because if you're in a bunch of like tech stocks, then you're actually exposed to that industry going down, where if it can point out to me, hey, you're actually really diverse and you've got enough in international and you've got enough over here and enough over there, like that would be a real value add to me, almost like a portfolio analyzer. And because they do the data so darn cleanly, I want to see it in here. Because I know there's other services that do that. Like I'm going to do future videos on other services that have a similar kind of tool to that. I'm just skeptical that they'll be as clear as this one is. This is so clear, so beautiful. I don't actually love the purple background. That's not my favorite thing, but otherwise, it's extremely clear and extremely well done, especially for such a new app. They have no business being this clean and this well done to be such a new company. That's really cool. All right, enough blown smoke up Fennel's Fennel hole. My wife and I were talking about it, and she was like, why would they name it Fennel? Because she doesn't like the fennel seed. When you put it in like a sausage or whatever, it just tastes bad. We were like, is this somehow connected to like seeds? What does seeds have to do with investing? Is it planting stuff again? Is it like acorns? Turns out, here, watch this. Here's the whole description on their website of why they're named Fennel, and it's way too long. And so I copy and pasted this into Notion, and I had Notion AI summarize it for me. Here's the real reason they're called Fennel. The company Fennel is named after the Greek myth of Prometheus, who smuggled fire to humans in a hollow fennel stalk, symbolizing the birth of technology and civilization. Fennel's mission as a company is to democratize access to fires in today's world, such as capital markets, ESG data, financial tools, and shareholder voting, to benefit the greater good. The company aims to continue Prometheus's mission of empowering humanity by making these resources more accessible. Bada bing, bada boom, now you know. Fennel, if you ever see this, let me know, and you can copy Notion's AI's summary of what your company's about. Since I just learned about this service, I couldn't put it into the best investing app for beginners. Maybe it'll make it into the cut for next year's video. But for now, if you missed that video, the best investing app for beginners is right here. Watch that next. Otherwise, the secret comment word for today is lemonade, because I need to go get some more. All right, see you guys next time. Bye.